All right, folks, here's two of my favorite stocks going into April here. We're about midway through August, but the first one here is going to be HIMS. HIMS is looking really good. They announced that partnership. We entered on this one right here off the signal in March. Okay, that came right there around $15. It gapped up the next week on that partnership news, and this thing's just looking so good. So right now what we're doing, because we entered down here off the signal at 15, is we're holding. And one of our sell strategies is to sell up here in the red zone. This tool right here is called the Fibonacci. Okay, it's a Fibonacci retracement tool. Okay, and what our sell strategy is to sell a red dot up here in the red zone. So we would be waiting for this price to retrace back up here. And I do have a position on HIMS right now, full disclosure. We are up here into the EMAs, but letting the trade play out, right? These signals here we take on the weekly are not day trades. These are swing trades. So our typical time frame is 1 to 6 months. So we're entering here, and then we're waiting for price to retract back up here into the red zone, because it always does, right? It always comes up here into the red zone. Again, that came right there at around 64, these red dots here, okay, and it pulled all the way back. I mean, went from 64 all the way down to 14. That is a brutal pullback. A stock that's very beaten up, that has very good earnings. They sold off like this because there was news they were getting sued, and then the company ended up dropping the lawsuit and partnering with them. Okay, that was NVO, the weight loss company. They were suing them, and then right somewhere in here, okay, when it gapped up, they announced that they were no longer suing them. So that means it's all systems go. And I really like HIMS. I think this is going to be a big winner here going into the next few months, going into spring. And then the other one I really like is ORCL, ORCL. This is a huge company. They make around $16 billion. They made $17 billion last quarter. So they're making $17 billion. Sorry about my light there. That's kind of weird. But this one's back down into the 4-year. So something we do here on the channel is we reference that 4-year moving average. So this blue line here is the average price over the last 4 years. So typically, right, if you're thinking about it, right, if we go over here to our cheat sheet, okay, the mean is the average. So the only way to know you're getting a fair price on an asset is to buy it at the average, right? That would indicate, hey, this price is fair. This is the average over the last 4 years, right? We never want to buy it way up off the average like it was up here at 360. We were getting our sell signals up there, those red dots. You can see those called the top. One called it right there at 250. One called it up here at 310 or 316. So our goal is to enter down here and exit up here on good quality companies. Both of these companies are very good, right? This company makes $17 billion a quarter. I don't think they're going anywhere, but I think both of these are going to have a really big spring, really big summer going into 2027 here.